Good evening. Today I shall be taking a look at the chemical sector of India, and the reason I've chosen to focus this video plus my tomorrow's article on the chemical sector is I believe the sector is on the cusp of a new move. Why I say that is because of two factors. Number one, when you go through majority of the chemical stocks charts, most of them are basing out or trying to form some bullish candles at the support. Then when you look at it from a quantitative point of view, that's the same fact can be seen. Another factor which is stemming my bullishness in this sector is the Ukrainian war. Why that is the case is basically pre-Ukrainian war, the European chemical sector was already struggling with high energy costs and high labor costs. Now the Ukrainian war has put more I would say a strain on the energy sector of Europe. Basically the impact we are facing from the energy crisis is lower than what is being felt in Europe. So now that is going to force a lot of the European chemical firms to either reduce production or to shut down plants for some time. So now this will give the Indian chemical space and the Asian chemical space in general a leg up, as it will let us enter a sector which has, in the global market, which has been dominated by the West until now. So now I've total, in this video I'll look at two stocks, and in the article tomorrow I look at three stocks. The first stock I'm looking at in this video is Clean Science and Technology. Clean Science and Technology is one that has been at the lips of a lot of traders from quite some time, as people have been recommending it as a buy from nearly, I would say, 1 month. However, the stock has been forming a base during that period, and now when we look at the chart, I will say we should only go long in this equity in the short term if it is able to break above the 50-day moving average on the daily chart. Because when we draw quant resistance levels, we see there is one quant resistance level at 2082, which is roughly where the 50-day moving average is. So now I would not take any position in this stock until it breaks this level, or if it falls to this support and forms a base here. If it does any of these two, then I will consider it as a long opportunity. If it breaks the resistance at 2082, then 2225 is the short-term target for the stock. However, for the people who are looking at it in a longer time frame, if it were to break 2082, I would purchase it with a target of 2410 to 2505. This is the next main hurdle in the longer term perspective for clean energy. If it breaks that, then it can go up to 2,900 rupees. But right now I would not recommend a long until it breaks 2082 or it holds 1,930, because I believe it is right now under an accumulation phase, and that is why it is trading within this range. So break of this is very important, otherwise you will just be stuck with the stock that is moving up and down and not doing much. Why I say if it holds support we buy, because at least you will be able to get an exit around 2082 if nothing works out. So there will be some profit. Now the second stock I'm looking at is IOLCP, IOL Chemicals basically. Now when we look at IOL Chemicals has been having a pretty rough time of late. I will say, as basically when we look at it from September 2020, the stock has been on a decline, and it has come from 845 rupees to at one point around 295 rupees. Now that is a huge decline in the stock's share price. However, the positivity I see in this equity, and is one of the key reasons I chose it, is when we look at the weekly chart. Let me just enhance the weekly chart only. Now, when we look at the weekly chart of the stock, it reached the 200-day moving average, had a bounce, and if we look basically at the bounce candles, look at the volume of that candle. Basically the volume had reached to 16.598 million, while the previous red candles maximum were topping about 4.5 million. So now that is a very good positive bounce in it. So we can consider this candle a major support, a major bottom for the coming weeks and months. Then after that, we had a bit of bearishness here, but we can see that the volume of the bearishness was severely low, and again this week the bounce up was with excellent volume. So this inspires confidence in me on a short-term basis plus a medium-term basis. Now, how I would trade this stock if we drop back to the daily chart. Now, I don't like Friday's move because this is like a chasing a rally. So I will wait for number one, either it breaks this resistance and comes back a bit down for a buy, or if it forms something like one of the stocks I'm discussing tomorrow, Valiant, where we had this candle, then it formed a base out, then pop again, a huge day. So I'll be looking for such a pattern. So basically, if it falls to this support zone, then I'll definitely buy it for the long term without even a thought, because we can see there, even on the monthly charts, the candle formation is absolutely fantastic. If we highlight it on the monthly charts, this candle formation is very nice. So it's got a good candle formation. The support levels are matching with quants and data, quants and simple technicals. So now that is a very positive sign. So if it breaks the resistance level at 442, I will take a small position up till 528 as a target. However, if it comes with a pullback, then I will take a good sized position on the, but that will be for a longer term up move. Why I'm placing a lot of emphasis on the 442 is if we look at the weekly chart, we're seeing the 20-day moving average is also resistance. So it has to break above this resistance for it to reach anywhere, and the 200 days also resistance in the 4-hour chart. So this is a very important zone for it to break. So when it's trying to break this zone, we'll get a bit of bumpiness, and that bumpiness is when you should utilize the opportunity to enter the stock while others are fleeing because of a bit of the bumpiness. Thank you for watching, and do like and subscribe to the video.